All right. Happy August. So, the July numbers for the Vancouver real estate market are out. Today, we're diving into interest rates, when to time your move, updates to the new eviction regulations, and other opportunities that will affect those of you making moves right now. There's a ton of news about the real estate market, and we're here to state the facts and offer perspective around them. If this is your first time to the channel and you want to know everything there is about real estate and living in Vancouver, subscribe below. Tap the bell for notifications to be the first to hear what's going on. My name is Megan Becker, local realtor, and this is Keaton Kirkwood with Kirkwood Brennan Mortgages, one of the top mortgage brokers in all of Canada. Our team gets calls every day from people looking to make moves in the greater Vancouver area. So if you're considering making a move, all my info is in the description box below. So please reach out. And if you are tuning in live, make sure to toss your questions in the chat. So today I'm excited to have Keaton here to talk about opportunities and what he's seeing in the market from the perspective of a mortgage broker. So welcome, Keaton.
Thank you. It's exciting. Can't believe summer's over.
I know it absolutely flew by. And here we are in August talking about the July stats already.
It's scary times. It's just clipping by.
Yeah. So I'd love to start. We're going to get through the numbers and everything, but what I think all of you are wanting to know is how to interpret what's going on in the market, whether you're buying, selling, investing, contemplating. And I think the first thing I would love to chat about, because this is a common topic that I'm having with lots of clients, and they are waiting for rates to drop. We've seen a handful of decreases over the last few drops, but people are still really hesitant to get into the market. And I'd love for you just to share your perspective around that mindset and what you're seeing.
No, 100%. It's certainly a common sentiment. BMO did a survey late last summer, and they found, I believe, 72% of new first-time buyers were waiting for rates to drop to buy. That was just one poll of a couple thousand people, but we hear it a lot. I know you hear it. I do. It's quite common. The challenge is that, what's the right way to put this? You need to consider cost. At the end of the day, that's all that really matters is your cost. High rates, low rates, that's kind of an emotional number, but the cost is the real thing. And I think that that's how decisions should be made. We know that there is a housing shortage in Canada. There's a deficiency of supply. So not enough houses, there's too many buyers or too much demand. And we're seeing housing starts decline while population growth is still ramping up. I saw a stat, I think we're 40.5 million people in Canada now. It's crazy how quick the population is growing.
Yeah.
So we know that at the end of the day, housing prices are going to be a factor of two things. One is the supply and demand. Are more people trying to buy or sell? And we know that big picture, there's going to be more buyers than sellers because there's not enough houses. And then the only other thing to consider that ties into rates is people's ability to buy, because not everybody's a cash buyer. So rates, ability to qualify for a mortgage is going to kind of be the other piece of that puzzle.
Right.
Now, as rates come down, we're going to see more buyers return. Those buyers their qualifying will increase. They will be able to spend more money. But there's a common thing that people miss, and that is you're typically taking a mortgage for 25 to 30 years. The rate you get right now is for anywhere from 1 to 5 years typically. The majority of people take 3 to 5 year products. So what happens is as rates go down, people qualify for more. As rates go down, optimism about the market returns. People want to start buying. You start to see, like we used to, where you have 5, 10, 15 offers on a property. That pushes the price up. It becomes how much can you pay rather than how much do you want to pay. Yes, you get a lower rate, but you get that lower rate for 3 years. You take on a larger debt for 25 to 30 years. So ultimately what happens is, and I actually have a calculator that we can share for anyone that wants, where we can do different comparisons of buying the same property for different price points at different rates. But a very small increase in price outweighs a relatively large drop in rate. So my advice to anyone, and don't use me. That's fine. Don't take this as a sales thing. Don't use our brokerage. That's fine. But buying now is likely going to be a better decision than waiting for lower rates and likely buying at a higher price. So
absolutely,
we got to weigh the pros and cons, and the math is very skewed in favor of spending less at a higher rate is likely to be cheaper than spending more at a lower rate. And many people saw this in 2021. They bought at record highs 2021, early 2022. And then they found out that those low rates were temporary. So they have this big mortgage and now the rates are trending up. Whereas we have seen values soften a little bit in many markets. If you can spend less and have a smaller debt at a higher rate, well, overall, the rates are going to diverge to whatever the average is long term. So it's one of those things that I don't know if timing the market's going to pay off for a lot of people, but we shall see.
Yeah, and I appreciate you sharing that perspective, and I think it's one of the reasons why I really like working with you, and I know our clients really do as well. And it's my mindset around working with clients too is helping them paint a big picture of everything. I think there's so much in the news about interest rates, and so people are solely focused on that. But I loved when you shared that calculator because it gives the bigger picture of what is actually important. And when I've used that with a few individuals and sat down with them and ran the numbers, and their eyes were totally opened of what to actually look for, and that it does make sense making a move right now when there's less competition, and being able to get into a property here. And I just have to remind people in Vancouver, remember what it was like in 21 and 22. I don't think we want to necessarily be purchasing in that market.
Well, I think one of the things too is that when we think of the sentiment that I'm waiting for rates to drop, we have to ask ourselves why. Now, obviously, part of that is a fear of making a bad decision, of unnecessarily spending extra money, but that's very easily solved with some simple math that you or I could do for someone in 5 minutes and show factual comparisons. So it's very easy to get a clear answer on that. If you need help, just reach out. I think the bigger reason, though, is that we know it is bloody expensive to own a home in Canada. Whether in the Alberta market, the BC market, it doesn't change. It's different folks, different financial situations, but it's expensive regardless if you're a dentist and a vet buying in Kitsilano, or if you're a electrician and a teacher buying in Edmonton or Chilliwack. It's I think one of the main reasons people are waiting for rates to drop is that the payments are too much for them, or at least uncomfortable. And the idea is that when rates drop, the payments will become comfortable. But I hate to say it, it's false. And what I mean by that is, yes, rates will drop, payments will go down, but odds are they will not go down as much as you hope. And as rates drop, prices will likely go up. So you have to factor that in, because the reality is rates are not going to drop 2% without prices likely going up. Because why did prices come down when rates went up? Because rates went up. What will prices do when those rates go back down? They'll likely go back up. But the important thing is, I was recently helping someone look at a relatively large purchase in Victoria, because everything's expensive there. And we compared their purchase, which is almost a $2 million mortgage, at 5% interest rates, 4.5% interest rates, and 4% rates. Just to be objective. Maybe they'll go lower, maybe they won't. The biggest thing that they took away from that conversation was like, wow, our payments don't move as much as we thought. Very large mortgage, 0.5% drop. They watch their payments go down $400 or $500 a month. But, a $10,000 payment going to $9,600 or whatever it is, it's not as big of a change as they hoped. And they realized very quickly that it wasn't worth waiting for versus trying to find the right property. And I think that's the thing. And the reason why I love working with you is the focus is not get a good deal on the wrong property. The focus is hopefully find something that you can raise your family and live in for the next 20 years. Yeah. Because the cost of moving from a good deal to the right home in 5 years is often significantly more than just spending a little bit more and getting the right home right away. Now, I know it's a luxury. Not everybody has the privilege or the ability to buy that right home right away. But if you have the option, it's often a better choice long term.
Well, and understanding clients' goals and really what they want to do financially. Do they, exactly like you said, do they want to be here? Is this a forever home or a long-term home? Do they want to purchase some, investment properties on top of this, and understanding the big picture and really advising clients based on your all-round goals?
100%. That's really the biggest part we do, is not like getting a mortgage. You can do that anywhere. It'd be better or worse experience. You get a slightly better or worse rate depending on where you go, but it's actually aligning the action you're taking with the outcome you want. And that's really what we focus on, is like, what is Megan trying to do 20 years from now? How do we align the mortgage and the strategy around that to optimize things, to minimize fees, interest, penalties? Because that's what has the big impact. Right. Not which color logo is on your mortgage statement. So
yeah. Or necessarily, who's going to give me the lowest rate? I've heard a lot of clients say that. That's all they're looking for. If your mortgage broker can give me a lowest rate, I'll go with them. If the bank can give me the lowest interest rate, I'll go with them. Maybe I'd love your take on that. Is the lowest rate the most important thing when you're looking for financing?
We do a couple hundred mortgages a year. I tell every single client that I will not get them the lowest rate. Now, don't get me wrong. Like, I don't get paid extra to get someone a bad rate. The goal is to get someone a fair and competitive, but the cheapest is always somewhere online dealing with some sort of chat box and, someone who's a bit new at the job and doesn't know what they're doing. There's everything's a give and take. Like, what do they say? You can get fast, you can get good, and you can get cheap. You can't have all three.
Yeah.
It's a balance at the end of the day. No different than you don't want to pay the lowest price for a home. It's not, Megan, I want the cheapest house in Vancouver.
Exactly.
It's a balance. And I think with mortgages, don't get me wrong, saving that extra 0.1% is great. But having a disjointed process, not having someone help you do your due diligence properly, assist you through the process, there's a certain point where it's like, hey, is it worth $13 a month to have a good experience and have someone that's legally bound to protect you and look out for potential issues versus just like, I got the magic price. And I'll give a parallel. One of the biggest mistakes we see people make is they go online for home insurance. They get cheaper. The problem is they use a magic box online. They plug in the information, and home insurance can be relatively complicated. How far away is the fire hydrant? What's the plumbing? What's the electrical? When was that updated? There's things that can be relatively in depth. And often we'll see people like, oh, wow, I saved $1,000 by going online on my home insurance. I'm like, wait, you went from 2,000 to 1,000? They're like, yeah. I'm like, I would triple check you didn't misinsure your property.
Yeah.
Because the outcome is we see that people often insure their properties incorrectly. The online portal is very happy to let you do it because they don't care. They have no responsibility. You did it to yourself. And ultimately, you're insured until there's an issue. And then they go, oh, Megan, you said that you've got a condo. You have a townhouse. And you go, oh, oops, we're really sorry. We're going to have to deny your claim. Here's your premium back. Good luck with the $70,000 of damage. So I think it's important that you have that balance of advice, guidance, and hey, if you want low cost, that's not a problem. If you want lowest cost, well, I think we all know that when we look for the utterly cheapest thing in just about any industry, I can order a pair of shoes from Timo for $3. I don't know if it's worth the $3.
Yeah, you'll get one wear out of them.
They're great for one date.
Yeah. I wanted to bring this up with you because a colleague had sent me this article, and it basically stated that rates are supposed to drop to 2.9% over the next 16 months. And I was kind of reading through it, but I would love your take on that because, like I said in the beginning, there's so much in the news about rate, the housing market, and everything like that.
So the answer is maybe. Like, here's the reality. We have to take a step back. So some economists have said rates will hit 2.9% in 16 months. Now, that person's far more educated than you are, probably. They've got a degree in something. But at the end of the day, there's hundreds, if not thousands of these people, economists, making predictions. You'll have predictions from rates are going to go up, rates are going to go down, they'll stay the same. At the end of the day, no different than the stock market, elections, anything else, people make predictions based off part data, part feeling, and they make a lot of assumptions.
Yeah.
Big picture, someone will be right. Probably a lot of people, because there's so many people making predictions. There's a lot of predictions that overlap. Maybe is the answer. Maybe they'll go down to 2.9%, but you have to ask yourself, what context would rates drop rapidly? The reason rates go down is because unemployment is going up. The economy is struggling. Businesses are laying people off. They're not spending. The size of the financial transactions of an economy are shrinking. So what does the government do? They lower rates to encourage consumers to borrow and spend more, people to take on more risk with investments and businesses, big businesses to borrow more, because if you have to borrow at 6%, it's much harder as a business to make a profitable venture than if you can borrow at 2% or 3%.
Yeah.
So I say this to give the context of rates are going to behave based on the economy. The economy is going to behave based on all of us and how all these very complex financial measures interact. Who gets elected in the US? What happens in the world? There's zero chance that anybody knows all of that. Like, personally, I believe the whole system is so complex that nobody knows. Because think, there's, at the University of Toronto, there will be an entire department dedicated to, you'll have 15 to 30 people of the smartest people in the world trying to figure out, and this is one of my favorite examples, there's two theories in the stock market. One is that the stock market is always perfectly and fairly valued. And the other is that there's periods of time where a stock could be valued high or low.
Right.
The financial world has not solved that question yet, which is correct. There's people on both sides that are very smart and educated that argue it. They don't know. So if they can't figure out that simple question, is there any way in hell they know exactly what rates are going to do or the stock market's going to do, or no? So maybe is the answer.
Yeah, it's understanding the context of everything, and why I always say the professional that you choose to work with matters, because I don't think it's up to the general public to necessarily know and understand how to interpret all of this. But I think the best thing that I recommend to clients and anyone that I'm working with is ask the questions to the professionals, and we can help you understand based on, because that's the thing. You can hear something in the news, but if that doesn't take into consideration your personal situation, which is, I know my clients, their goals, what they want to achieve out of here, so we can piece all the things together there.
I'll share a secret that should be not so secret. We don't know either. The
Yeah.
banks don't know. Like, unless you subscribe to the idea that it's all elaborately controlled by some group or government somewhere in the world, and it's all this orchestrated plan, which I don't. I've seen too many government projects epically mismanaged to think they control the entire world. Nobody knows. There's a certain degree of maybe. Will people, as times get tougher, will people flock together and new businesses will start and the world will change? Or will people struggle and contract and start living with their parents? That level of decision at mass is what's going to decide these types of things. Along with a lot of other very complicated stuff, like how different countries interact. And so I think what's important is when you go to a professional, say ourselves, it's not about predicting the future, but rather interpreting the likelihood of things happening. Maybe rates will go down this much, but what if they don't? And
Yeah.
turning that into simple English of, hey, Megan, if you choose to take a 5-year fixed, you are aligning yourself with the best worst case and the worst best case.
Yeah.
With the star of, if you lock in at, let's say 4.5% and rates go down to 2.5%, and you try to break the mortgage in 18 months, you're going to have a $90,000 penalty. And you might go, whoa, wait a minute. I'm young and eligible. I might get married and sell this place and go buy a big house. I don't know. Then maybe it's like, well, hang on a minute. If you think a life event, maybe moving to Toronto or whatever it could be, could cause you to break this mortgage, maybe we're better to pay 0.15% more and take, let's say, a 3-year fixed instead of a 5. We're still in the same direction of making a financial statement or bet, which is rates may drop, but they won't drop super quickly. But we're minimizing our penalty risk. We have maybe a chance of a $50,000 penalty for 9 months out of that 3-year window. And you might go, well, I'm still not comfortable with that. Well, then maybe we go to a 2-year fixed, and now maybe it's a 0.4% premium, because the shorter you go right now, the more expensive it is. And you go, well, that's too expensive, and I don't want to be stuck with this for 2 years. Okay, well, maybe we keep swinging the pendulum to an adjustable rate mortgage, where as rates are cut, your payments go down and your penalties go down. This is the type of conversation that should be had, not just lowest rate or, get the crystal ball out. What's the future?
Yeah, exactly. I would love your perspective on a common scenario that I'm seeing with clients and a lot of people is they need to make a move. They're likely, these are upsizers, a few downsizers in this position, but they need to sell before they buy, and they're trying to figure out, when is the right time? Do I sell in a slower market but buy in more of a buyer's market? Do I wait till the market is more favorable for me to sell, and then I'm potentially competing? Like, I would just love your kind of, maybe 150-foot view of those situations and what your perspective is.
Well, the first thing we have to consider is what your worst case scenario is. If you sell first and you can't buy, your worst case is you stay in an Airbnb with potentially hundreds of thousands of dollars in the bank, which, hey, that might still suck. You may have a family, a dog, whatever it may be, school zones. But the alternative is, if you buy first, your worst case scenario is you get sued. Assuming that you're not in a position to carry both properties, you don't have, divine intervention in the form of wealthy parents or whatever it may be. I think that's the first thing we have to consider.
Yeah.
But when we go a level beyond that, there's often compromises that we can make where, is there a way to carry both properties at the same time? Is there a way and often you and I have to deal with this together, where we can thread the needle, where you can write an offer to buy a place on, let's say, a Friday, knowing that the property has been priced very aggressively to get lots of attention, so that you can hopefully get an offer Sunday, Monday. Maybe as the realtor in a slower market, you negotiate a slightly longer condition removal for the buy.
Yeah.
If we do everything right, now we can't guarantee the outcome, but we can stack the deck for you. Maybe you have a subject removal in 2 weeks for your purchase. So let's say 14 days. The sale, you selling your home, is in 10 days.
Yeah.
Well, now you're in a perfect scenario, because if someone decides to buy your home, you still sell first. You know that you already have a property tied down to buy, financing approved by that point. And you can, it's difficult, but it can be done, where you can sell and buy simultaneously. Like, in my opinion, that's the best case.
Yeah.
The problem is that it can't be done 10 out of 10 times. Maybe it's 5 out of 5 or 5 out of 10. But there's other things we can do too, like as a broker, to work with you as the realtor and maybe have a subject to sale clause or a subject to purchase clause. Now, does it work on every deal? No. But sometimes you're dealing with probate, or where they're waiting on probate, as an example. Now,
Yeah.
you know it will happen, but it might not happen for a couple of months, and they might be fine giving you 2 weeks or 3 weeks to figure things out. So I think the important piece is having the different professionals communicating with each other to find a collective solution, rather than the broker maybe just saying, nope, you have to sell first. Well, there's degrees of sell first. And sometimes it takes a phone call or a Zoom call where everybody gets together and we say, okay, maybe we need to sell first, but that can look like different scenarios. One is you sell, you've got the deposit, you know you've sold, then you frantically search. The other is maybe you sell and buy simultaneously. Maybe there's a version where it's like, hey, Megan, how confidently can John and Jill sell their property at, let's say, $1 million? And you go, well, if we have 60 days, I'm 99% certain it'll sell at that price point, because we're pricing a little bit below. We're hoping to get some attention to bring it back up, but that's a price point where there's demand.
Yeah.
Okay, Jack and Jill, worst case, if we had private financing, it will cost you $52,000 if you didn't sell for a year. But your worst case scenario is that we have to close at private financing. It costs $52,000 over a year. Best case, it's an open mortgage. There's $10,000 in fees, and I'm just making up numbers, whatever this may be. But if Megan sells your property in 5 weeks, great, you never use private financing.
Yeah.
If Megan sells your property in 4 months, well, then maybe your cost is the initial fee and the legal cost and $3,000 of interest. But we can go through kind of the layers of troubleshooting rather than just black and white, you must sell first.
Yeah. And that's one of the things I've worked with lots of clients in that scenario. And we talk about that at the kitchen table is, what's the worst case scenario? What's obviously, I want to know your best case scenario, like all the cards align, but let's talk about everything in between and make a plan, because sometimes for people, it's not always about the financing. About the financial piece of it. It is about the dates or the terms, or there's a lot of moving parts in there. And so the more that we understand that, the better we can, put together a strategic plan for that.
The reason is the why. I'll share a real world example. We had a client who had family from Ukraine, and they were coming to Canada as refugees because of the war. They needed to live. Their parents needed to live with them. So we had a reason where there was a very strong reason. Family that was coming had a little bit of money, so the financial cost was less of a concern. And we used that private solution as a worst case scenario. They bought first. And they were ready to sell. The property was on the market. Like, don't get me wrong, they did everything they could to maximize the chance of a good outcome. The realtor did a good job, and ultimately they bought first, they sold. They never had to use the worst case scenario, and everything was happy. But they had a very strong reason. Family was coming, had to stay with them. There wasn't the bedrooms. And they ultimately made a calculated risk, and it ended well. But let's say someone else just decides they want a newer kitchen. Well, you're probably not going to risk that worst case scenario of, let's say, $40,000 or $50,000 of extra costs for a nicer kitchen.
Exactly.
In that case, maybe you take that worst case scenario and say, let's just renovate. So it's important to align your options and the pros and cons with your need and the reason why. And that's why we always go back to that. Why are we doing this, Megan? Like, what's the actual reason? I want a nicer house, or a bigger house is very different than I need a nicer house. We're having a baby in 3 months. It needs to happen.
Yeah. Okay. It's a black and white. It's a black and white answer.
100%.
Awesome. Well, it's a really great perspective. Let's we'll kind of wrap things up here, and I wanted to go through the numbers for everyone, and then Keaton and I will just share our closing thoughts here. So, July numbers for the entire Greater Vancouver area. Just to put it in a clear sentence, sales are down, listings are up, and buyers are hesitant to get in the market. That's really the summary right now, which is why we're seeing opportunities. So sales are at 2,333, which is down 3.5% month over month, down 5% year over year. Listings are up. They're at 14,326, which is up 1% month over month, 39% year over year. Sales to active listing ratio for detached is down to 13%. Attached properties, which are your duplex townhomes, are sitting at 20%. And then apartment style condos at 19%. Benchmark sale price for all residential, we're sitting just under 1.2 million, which is down month over month, 1%, down 1% year over year. Detached properties, we are sitting at 2,049,000, which is down slightly at 0.6% month over month and up 2.1% year over year. Your townhomes, attached properties, sitting at 1.124 million, which is down 1.5% month over month, up 1.5% year over year. And then apartments, we're sitting at 768,200, which is down 0.7% month over month and down slightly at 0.3% year over year. So prices are trending down for the last handful of months here. We're not seeing as many buyers get into the market, but maybe some closing thoughts for people that are contemplating whether that's buying or selling, Keaton.
Well, I think an important thing is actually interpreting the data, and that is, what's the right way to put this? Last year, so as an example, we know that listings are up 39%, but we have to ask ourselves, where were we last year? Well, we were in the middle of rates going up, huge amount of uncertainty. The market was very slow. A lot of homeowners were just sitting tight. Now we know that some renewals would have happened and there's more coming. But Megan, last year, was the number of listings on the market a relative low point compared to, say, previous years?
No.
Was it a high point last year compared to, let's say, 21, 22 for listings?
It was higher.
So there was more people selling last year?
Yeah.
Interesting. So we're seeing momentum pick up on the market for people selling, and we're seeing the number of buyers diminishing. So there's two ways to look at that. There is, what is everybody doing? And that is, there's many people trying to sell and not so many people buying. But then we have to ask ourselves, what is the outcome we want? If the goal is to buy a home at a good price, well, it's better to buy when not many people are buying and lots of people want to sell. As Warren Buffett says, you want to buy low, sell high, which means do the opposite of everybody else. Because if everybody's buying, then it's high. If nobody's selling, it's high. But if everybody's selling and nobody's buying, it's low. So I think at the end of the day, it's one of the biggest things is that humans do not do math very well intuitively. I've got all sorts of examples on that, but we'll dive into that another day. But you kind of have to do the opposite of what your gut feels. And that's why so many people are such bad investors.
Yeah.
Because, when you're scared, well, everybody else is scared. You have to ask yourself, is it an emotional reason or a factual reason? Usually it's emotional. And then you have to behave kind of opposite of your gut and based on the logic or the factual. But logic and factual doesn't usually give you scared or happy. It just is. So you have to kind of get that noise out of there. So I think it's an interesting time to buy, but we shall see what happens.
Yeah, absolutely. It is a mindset, because I think when you say your gut, I think a lot of people mistake their gut as what is everybody else doing, and they validate their decision by what everyone else is doing. Everyone else is waiting, therefore I should do that as well. But understanding, common, success principle, when everyone's doing one thing, do the other thing, and you can find some great opportunities there. So
100%.
But any closing thoughts before we wrap up here?
No, I think at the end of the day, the big piece or the takeaway from all of this is that you should be having conversations with your professionals just beyond just simple the transaction. Like, I want to buy a condo, I want low mortgage. there should be humanity in the business that you do, because at the end of the day, your happiness is not tied to the numbers on a piece of paper, but rather the achieving of your goals, and ideally a good, convenient way that align with what you're trying to achieve long term.
Absolutely. Very, very well said. And I couldn't agree more. Well, awesome. Well, thank you so much for joining us here. And thank you all for tuning in. I will put all of Keaton's info in the description box below. And as always, if you're considering making a move, I would love the opportunity to chat. So my info is in the description box below. So I would love for you to please reach out, and we will see you next month with the August numbers.
Cheers.